Hello everybody, my name is Andrew and today let's talk about fractional shares and why the good people of Sherwood are so pissed at Robinhood. But before we dive into the gossips, what the hell are fractional shares anyway? Well, it might seem like some sophisticated financial term, but in reality it's so ridiculously simple that even PewDiePie wouldn't have dared making this a 10-minute video. Well, I'm not Pewds, but God knows I miss him. Anyways, fractional shares. When a brokerage offers fractional share trading, all it really means is that they can take one share of a company, break it down into a buttload of smaller portions, and then allow you to buy and sell those smaller portions just like you would with full single shares, and thus giving you an opportunity to invest pretty much any amount of money into any stock or ETF regardless of their price. What, no? Alright, think of it in this way. If a share were a pizza, a rising crust DiGiorno pizza, you could go to your local grocery store and be like, hey, I want some pizza, but I only have $1. And they would gladly slice it up for you and sell you just one bite.
Cool.
You see, shares of different companies are traded at different prices. I know. There are penny stocks which you can get for say 30 cents. There are stocks for $50, $100, $300. There are more expensive ones like Google and Amazon. And then there is Berkshire Hathaway. Yes, this is the price for just one share. Ouch. But guess what? With fractional investing, all those prices don't really mean much to you anymore because now they no longer dictate what you can and cannot afford. So you can bite into juicy apple just with that spare change in your pocket. And that is phenomenal. Many people would love to get into investing because it is simply a smart thing to do. #adulting. Everyone, including Warren Buffett, is telling you to invest in index funds. And yes, you get all excited. I will give up on my Netflix. I will not go to Starbucks anymore. I will save $100 per month and I will invest them into index funds. And then you Google Vanguard's SP 500 and it's $300. What do? Do you wait for 3 months just to get one share? Unless of course it doesn't go up by $50, adding another month of waiting. Or maybe you decide to compromise and grab a couple of $20 stocks. They seem like a good deal, although you don't really know that much about them, but hey, at least I'm investing, right? In my very controversial opinion, investing only in what you can afford versus what you really believe in and you would love to will probably lead to a less diversified portfolio and higher risks. The slightest bump in the market might be the unpleasant experience that will make you burn out faster. And perhaps even quitting investing thinking that, well, after all, looks like it's not something for you. But Andrew, $100? I'm thinking of investing $500 or $1,000 per month. Well, the same still applies. Let's say you can't afford to have this feast once a month and grab 3 VOOs. You are still left with $100. And what are you going to do with those leftovers? Patiently stuck them into the fridge until the next paycheck? Or maybe, just like a lot of us, and I know I'm guilty of it, you go, what the hell, let's see what else I can get for it. And you end up with quite a few impulsive orders. Fractional investing, on the other hand, allows you to invest every dollar in whatever you want, whenever you want, ultimately making you a more consistent, thoughtful investor with less random crap in your portfolio. To sum it up, I believe something that changes your behavior in its core is one hell of a big deal. But then again, are fractional shares something new and unheard of? Well, actually no. Even before the Fidelity's announcement, I had already purchased quite a few fractions through my accounts in M1 Finance. A video on that platform, by the way, is coming next week, so stay tuned. And now back to Robinhood, who rose to his glory as a disruptor, a rebel, going against the status quo, giving regular people commission-free trading, a sexy app, and quite a few other perks. The people of Sherwood were praising their hero, while greedy royals of the investing kingdom were plotting to teach him a lesson. Once upon a time, drunk with his success, Robin stepped onto a softbox and promised every man, every woman and child that he would bring even more of those ambitious, tasty goodies to the table. One of those goodies was fractional share trading. He hyped people up, signed them up onto some magical, mysterious waitlist, and then... In the meantime, the royals have finally decided to please the peasants and ditch commissions as well. And one day, last week, one of them, by the name Fidelity, out of the blue made an announcement that she was rolling out fractional shares right away, pretty much beating Robinhood in his own game of disruption. The rest had no choice but to follow. The people of Sherwood were so mad. They grabbed their pitchforks and torches and marched to Robinhood for the answers. "Hey, what the f***, man?" To which Robinhood only peeked out of his window and said, "Hey, come on guys, relax, it's coming, I swear, it's almost done." But it was too late, because the villagers had been already pissed off and thirsty for blood. And oh, you will not believe what happened next. So yeah, looks like the big boys are after Robin, and oh, he'd better move his ass quicker, because there's less and less of those delicious features he is able to lure people with into his green van. My guess is that once the legacy brokerages finally decide to pimp up their apps, we will see a lot more transfers. I've read people's reactions to the news, and I don't know, a lot of those who are usually paranoid about not being very well diversified think that it's a very great idea to have their investments and their savings and their income under one roof. I don't know. What do you guys think? Would you put all of your eggs into different baskets and then grab all of the baskets and put them into a one shaky shed? Personally, I don't see myself leaving Robinhood anytime soon, just because a competitor is rolling out one or two features a little bit quicker is not that good of a reason for me to leave. So yeah, your dear peasant is not running from Sherwood. For now. Do popatrzenia. Like and subscribe!